Hey everyone, it's Sean and welcome to Invest with Fire. In this video, I want to talk about where Bitcoin's possibly going to go from here, right? We had a high of 64,000, about a couple months ago. And we have crossed the 200-day simple moving average in May, right? And we've been trending sideways. So I think it's safe to say that we are officially in a bear market. And people were calling for a V-shaped recovery. I don't see that in this pattern at all. If someone sees that, let me know. But this definitely does not look like a V-shaped pattern. So, have we reached the market peak of this cycle? And are we going to continue to go downwards? Or, are we going to continue to go, or are we going to bounce back from this and hit 100,000, this year or next year? A lot of people were calling $100,000 Bitcoin in 2021. So I just want to talk about where we're going to go from here. So first off, I want to talk about this one model called lengthening cycles and diminishing returns. And this model is popularized by Ben from Into the Cryptoverse. And what he basically talks about is that each cycle has diminishing returns, and the time of the cycle goes out further and further. So if we take the bottom of these peaks, right, or of each cycle, let's see, I'm just going to graph this and graph this part. Hold on. And this is kind of just a simple visual thing to look at. And if we just take the market bottom and take the peak from that and we put it on this current cycle that we're in, we can basically see that each cycle gets longer and longer, right? So I'm going to take the second cycle, where I'm taking from the bottom to the market peak right here. I'm going to grab this and put this on the current cycle again. And boom, I'm going to change its color. So right off the bat, right, this was the first cycle of Bitcoin where we came from the bottom and then peaked and then crashed. This is the second cycle where we came from the bottom and then we had a double peak and then we reached the peak and hit the bottom. I'm going to take the next cycle right here. Oops. Boom, right? And this is in 2013 where we had that double peak. And a lot of people are calling that this current cycle is where we're going to have a double peak. And this is what they're talking about. Because back in 13 we peaked and then we crashed and then we peaked again. And then I'm going to take the third cycle, and I know it's a little bit arbitrary. It's like, where do you take the bottom from here? But I'm just going to take it from here, right? And then so this bottom to this peak, this is the third cycle. Boom, change its color. Change a little bit something more. So first off, right, I mean, we're seeing that each cycle is getting longer and longer, right? So you can see that the time in between these from the bottom to the peak is getting longer and longer. And currently, I see this line, right? This is the cycle that we're in right now. And, is this the peak right here of $64,000? I don't think so. Because this cycle that right here hasn't even gone past this peak right here. So, this may do something where Bitcoin may trend downwards and then go up and then we may peak out somewhere over here, right? And people are calling for 100,000. So, I mean, this kind of makes sense, right? This fits with this model of the lengthening cycles and diminishing returns, because what the model calls for is that we're not going to go as high as these previous peaks. And the cycle gets longer and longer. So this is one thing that gives me confidence in seeing that based on the previous history of Bitcoin, we have not bottomed out yet, just based on these previous peaks. And this is the time where this is the time where you want to buy Bitcoin. You don't want to be buying Bitcoin when the hype, is increasing, and all you hear on the news is about Bitcoin, right? So this is where we all get rich. If we're looking at the trends and accumulating Bitcoin when there's fear in the market, right? And you want to sell into strengths when the price of Bitcoin is going up. So the next thing I want to take a look at is the Bitcoin log growth curves. And we'll take a look at the history of Bitcoin, and you can see that these growth curves show a definite trend of where Bitcoin has gone up and down, right? So you can see back in 2011, right, the peak of this cycle hit the top of the growth curve and bottomed out at the growth curve, right, at the lower bound right here. And 2013, we had the double peak, which people are saying that this current peak, current cycle is going to be the same thing, where we didn't actually reach the top of this upper band. We went up, went down, and then we peaked again, and we hit the top of the band, and then we had slow, gradual crash down. And then Bitcoin continued to ride the bottom of the band, and then we had the peak in 2017 and 18, right, where we hit the top of the band. So now in this current cycle, we did not hit the top of this band right here. And even though we're below this 200-day moving average, we still haven't hit the top of the band right here. So this model, along with the lengthening curves and diminishing returns model, are two things that give me really good confidence in that Bitcoin still has not peaked in its current market cycle. And of course, models are usually wrong, and sometimes they're useful. So, we're just using the past history to see what the trend of Bitcoin is, right? And we're using this to project out in the future. But of course, no one knows the future. But these are two things that give me confidence in knowing that we have not reached the peak of Bitcoin. And I'm continuing to dollar cost average in while we're in this bear market right now. So that's it, everyone. If you like this video, please like it and subscribe, and I will see you later. Thanks. Bye.